we are giving the opportunity for these 2 weeks to let everyone get into the trial without the minimum $9.99 that we charge for the trial. So technically, it's an open trial for everyone that wants to register it. We as a company, we base our forecast in Elliott Wave principle. 99.9% is Elliott Wave principle. We use the RSI also as an indicator to locate momentum, but technically that's about it. And then we also use the market correlation to analyze different pairs and different markets, how to relate themselves. So technically that's what us. We ending a fiscal year. We ended yesterday, I believe, on the 30. We finished the year almost with 2,600 picks of public profit. So technically, a client that get into the survey with a $10,000 account to put in money amount, and you trade to $3 a pit, you should have made about 80 or 90% of your money with us for the last year. So I think it's pretty good. Taking in consolidation that almost 95% of the traders lose money in this business. So we are very conservative in a way that we are not those type of service that all they do is in and out. We try to protect the client's money as much as we can. We are not perfect, but it's going to be losses, and we're going to lose a trade here and there. For the last quarter, we ended with a 78% winning. Last month, we ended with a 94% winning. But like I say, sometimes we're on the wrong side of the market, like everyone is. Because if I have we have the Holy Grail, we ain't gonna be doing this. So, any question, you can email me, Eric, or James. It's on the work on email right there. You can email us, and we're always gonna get back to you guys. All right. So let's start with the seminar, guys. This is the U.S. dollar index in the 8-hour. The U.S. dollar index is being recovering pretty much and pretty strong technically after the end of the summer. And at this stage, in the 8-hour, from the lows of 72.40 area, all we got, and I want to be clear about it, all we got is 3 waves. Now, we are bullish U.S. dollar, but to be 100% bullish U.S. dollar, all we need to wait and all we need to have is this. 1, 2, the wave 3, the 4, and the 5. And then from there, you can say with 100% insurance that this is the bottom on the U.S. dollar, and then the U.S. dollar is going to go to around 1 or 2, going to go pretty much higher. So for now, that's the long-term view, bullish dollar, but we know that the dollar at this stage is ending a cycle. Of course, the cycle, it closed at 78.55 on Friday. The cycle can get as higher to around the 80 level. So it's a long way to end the cycle, but I want you to be clear about it. Now, when the cycle ended around here, the dollar is going to end 1, 2, 3. In an Elliott Wave move, as everyone there knows, we need 5 waves to call a bottom or a top. So technically, we are right here right now. We are very close to here. Now, the inside wave, they are very clear. You got 1, 2, 1, 2, 3, 4, 5. That's perfect. Let me take some Fibonacci numbers from there so I don't get you confused. And I'm going to throw it again. If you take it, this one, you guys going to see how it went to the 4.23% right there to the pit. Then it retraced pretty nice to the 30 AO2. Then the next move higher comes from here. Okay, 1 second, from here to here. It went to the 618 right there. So this is a cycle that started here and ended here. Last week on the seminar, we say that the dollar is going to get weak. Exactly, that's what I did all week until Friday that it got some less up. Now, the question that we're presenting today is this is all the way forward we're going to get, or this is only A within the way forward? That's what we're here now to let you know what we think about it. Now, right here also, if you take the Fibo here, you're going to see that the high was the 2618, as we pointed out last week. And then all week, we were waiting for the US dollar to get to the 76, 78 area. But we knew that he was bouncing from the 23.6 area, which the 77.57 area. All right. So with that in mind, right here, we got two ways to go. Either the dollar is going to keep going higher, like it looks like it's doing on the pre-market. The dollar is going to keep going higher. If that's the case, and this is the old way forward we're going to get, the dollar should rise onto 79.26, 78.86, or the dollar should find a top also around an extension. 1 second, my bad. Should find a top around 80.67. One of these three levels is going to make a top for the dollar this week. Either 79.26, 79.86, or 80.67 in extension. Now, from that high, let's say we are now on the big cycle. So technically, this is the one that is in place. And a level of interest to the top right there compares to the figures that we just put it there. It looks to be the 2% right here, which come. 1 second. I did it wrong. It's the 200%. It's very possible that comes around the 80 area. So, in my view, if there is an scenario when the dollar already in the wave 3, the dollar should get trade higher to 79, like I say, 79.25 as a minimum target, or 79.86 or 80.60 area in extension. One of those four levels is going to create a temporary top for the US dollar. Now, as a trader, right there, you need to know what's coming on and what's going on in the market. If the dollar got the bottom here, this is what's going to happen. The dollar is going to go to the previous 4 and it's going to bounce back. If this is another trap, which I doubt it at this stage, but well, as a service, we always have to leave you guys the door open and say, this case, there is no bottom in the dollar yet. Most likely, yes. 97%, yes. But to confirm a bottom, you need to get the 5-way. If you didn't get it here, don't feel bad, because this is what's going to happen. After he makes a 3, a 4, and he makes a new high, he's going to retest the 76 area right here. So that's why you never chase the market, because we didn't get it around this area. It was very questionable. It looks bearish. But at the end of the day, I know that the market's going to give me the chance to get it here. And from here is when you cannot miss it. From here is when the real move is coming around. So keep that in mind, that can be the case. Now, that's for the dollar. In the short time frame of the dollar, like at 1 hour, This is what we see. Very similar to the euro, as you guys know. Okay, let me take this because I was playing a little bit right here. Now, let's say that this is the whole wave 4, or this is an alternative wave 5. This is an alternative, I'm sorry, wave A. We are in a flat, but to be honest with you, I would say it's an 80% chance that is the wave 5. I would leave a 20% chance that is a flat. After seeing yesterday that we saw almost 80 charge around the market. So that's the message that we got. Now, if it is a flat, again, you put it right here around 79.24 area, he can make a bounce and make a seaway, brutal seaway. It is justified. I can say that. I can see oil and the S&P supporting that scenario. But the currencies are supporting the other. So technically, if it's not a flat and it is a wave 5, what it used to be, we pass in the dollar, we make a new high, like the euro make a new low today. So now we passed the 1618. Now we gotta be seeing these two levels, 79.14, or in an extension 79.67. If this way ended at 79.67, technically, then the dollar is gonna go to 80.60, and we should be buying the 3 back around this area. This resistance right here is gonna become support to the 5th wave. Compared to last week, we should be around this area right now. And this is what we're expecting for the beginning of the week. A top in wave 3 or B, and then seeing the decline, we're going to know if we're going to go with a flat C, or if the dollar is going to continue to rise. So technically, we are about, compared to last week, we are about here right now. So you guys know right there, we are about here. All right? So that's what we see for the dollar. That's what we see for the dollar. As always, any question about the dollar before we're going to get now into the market correlation and all the stuff right here. Any question about the dollars that you guys have? I think it's either in wave 5 already, or the dollar is in the flat wave B. Most likely it's in the flat because, I'm sorry, most likely it's in the wave 5. I see in the RSI showing me that should be the path. So I'm waiting for 79.14 or 79.65 to create an extension within the dollar in this move down out. Now, if there is no question, let's move on to something that I want to show you. Okay, this is the dollar index in the dailies. As you guys see, all you got are 3 swings. 1, 2, 3 swing. All right. So the dollar is showing 3 swing, and with that in mind, what we want to do now is show how all the pairs compares to the dollar are showing most like the same structure from the lows. Now, the dollar CAD is the most clear structure of all, believe it or not. Now, if we take the dollar out and we put the CAD, this is the dollar CAD. When you got 1, 2, 1, 2, 3, 4, and 5. So what the dollar CAD is ending is ending wave 3 right now, the big wave 3. So the CAD should do this. The CAD from there, from around 105, 106, the CAD should do a big wave 4 and get back higher again. Now, that's the cat. You guys can look here to see the color, because I'm gonna be adding different pairs to the overlay with the dollars and the cat. Now, that's the cat. Let's put in the dollar on top of the cat. You see, most likely the same way, but the cat bottom here, the dollar looks like bottom here. So which one I'm following? I'm following the cat. Why? Because the cat is much clearer than the dollar. That's what I'm following the cat as a leading path when it comes to market correlation and locating when the dollar is. Now, let's take the dollar. Let's put now the Aussie. Of course, the Aussie is inverse to the cat, but the Aussie and the cat, both pairs are metal pairs. So in the Aussie, there was a debate last week and the week before if we were ending a wave 3 or we were ending, a wave C or an S or 1, 2. Aussie is the red. From here, if we were ending A, B, C, or we were on the next. Now, the cat is telling me that we are in the next right here. Why? Because if you take a look, the same day that the cat top, Aussie top, the cat bottom, Aussie bottom. Now, the Aussie did 1, 2, the cat did 1, 2. The next on the cat, it was much clearer. So that's telling me that the Aussie as a cat should do pretty soon this week something like this, a correction, and keep going lower. That's what's telling me. Let's put another one on the top of that, and that's going to be the New Zealand dollar, another metal pairs. Same scenario. From the top, look, around same day, 1, 2, and the same debate. It was all wave 3 last week, or this was a nest. We believe like Aussie New Zealand top is for real. New Zealand top is for real. The same with the Aussie, the same with the bottom and cat. Of course, it's in the weeklies and the monthly and the daily charts. You cannot call it top yet. You need to wait for 5 waves. But the market is being following a very important move or modest move. Know that not every top is a beauty. And like my good friend James always say, tops, they're always ugly. So this is the case, I believe. We're going to go in more details when we get to the individual pairs in the few minutes. Now, let's take those two, and we're leaving the best for the end. We're going to put now the euro dollar, the one that everyone loves. All right. The euro dollar looks ugly. This was an amazing range of trading. We can say with a proud here that, hi, my friend. We can say with a proud here that, being proud that we keep the right count most of the time. It was pretty hard to labor in all this mess in the summer, but at least we were profitable and we were on the right side of the market. We made some trades, but we didn't wear like loss. We pretty much have an idea what the market was doing. Now, getting back to the overlay, seeing the like you guys see right here, the euro dollar is the blue one. The cat is the brown one. Now, you guys already saw the New Zealand, the cat, the Aussie, and even the dollar. Now, if we place the dollar on top of the cat, like I say, The dollar is most ugly structure, but the cat and the dollar always go with the same trend, being the dollar the leading pair in the dollar cat, of course, most likely, but there is a huge correlation there. Now, if you take a look, and let me get back a bit, so I want to be very clear about what I'm going to say now. These three pairs, the cat, which is the brown, the red, which is the Aussie, and the New Zealand, which is the green, are telling me that the top and bottom is in. And they're telling me that those pairs, they are ending a wave 3 right now. Very clear. Look at the cat. 1, 2, 1, 2, 3, 4, 5. We're ending wave 3 from the lows. Same with the Aussie. 1, 2, 1, 2, 1, 2, 3, 4. We need this in Aussie to end. Wave 3 should end around here. So with that in mind, I was thinking over the weekend, and I say, how I'm going to correlate the dollar, how I'm going to correlate the euro dollar to the whole environment here. Because the cat is very important. The cat is the clearest structure in the market, believe it or not, and it's very hard to say it, but it's a fact. So going back to the euro dollar and taking the Aussie and getting back and putting the euro dollar right there. I'm sorry, that's the dollar. Yeah, let's leave the dollar. Putting the euro dollar from the top. We have a count from the dollar that I showed at the beginning of the seminar, which is 1, 2, and ending wave 3 with a new high. So my question is, why is not the euro dollar being able to be in the same stage? And we did a video to the members over the weekend. It was late Friday, and this is a count that is very easy to be happening right here. When you got 1, 2, let's say right here, you can label in as an irregular 2, but a nest from the top. I'm going to go over the count when we get to the euro dollar with the labeling, because right here I don't have the labeling. So technically it's 1, 2, 1, 2, and ending wave 3 right now. The low of 133.60, it was the 1.618 extension of this move compares to the wave 2 here to the downside. As of right now, we're gonna keep that count as an alternative, but as much data we're gonna get, we're gonna be able to see if that's the right count, or if the preferred count, which is calling as ABZWS, and then ABZ and ending a double zigzag from here. So keep that in mind, but I want you guys to understand how all those pairs looks like with the data is showing that we're ending a wave 3 in all those pairs pretty soon within the dollar group. I want you guys to understand that and be clear about it, because it's very likable that that's the scenario. As my partner, a good friend Jane says, and I know also that his phrase is so good. These markets, my phrase is, they're never going to make it easy. His phrase is, when you don't even notice the euro is at 118, and you say, how, knowing that it's going to drop from 150 to 118, I didn't get it. Because they're making it hard. They're going to make it easy for friends. Never going to make it easy. So, with that in mind, traders tend to concentrate too much on the euro. I would like to say this. The clearest structure in the market is the dollar cat. Dollar cat now should enter in a correction. That is the way fall from the lows. If you see and we see that that correction, it is corrective, you need to start selling the euro with everything you have and close your eyes like I did personally in 2010. I closed the euro and I got an extremely good trade because that won't be easy. That's something that I can say. Still, there is a chance. All depends on the S&P. Still, there is a chance a bounce happen in the euro to the upside after a WSY strode to coming to 129, 131. But well, it needs to be seen. All we say is we're gonna follow the euro cat, the dollar cat, very close because the data is start to making sense to any imports from the top. Now let's see some metals now before we get to the individual pairs. We're gonna start with copper right here, and let me remove this. Let me open it up a little bit. This is on the daily, yes. Okay. I'm opening too much. 1 second. Okay. Same scenario. I mean, if you guys, our members know, the new members, we got about 20 new members only yesterday. That's pretty good. Our members know that we track copper pretty much because being copper an indicator of the global economy. And there is a count that you can call this a truncation on copper on the daily, and this being 4 and 5. Well, I don't care about it right now too much. What I care in copper is that I know that from here, we got 1, 2, 3 swing. Now, the recovery from the lows, right here, we got 3 swings, my bad. Now, from here, we got 1, 2, 3 swings with a wave 4 taking place. I want to see in copper when he reached the 2947 area or 2.294 area, how he reacts. Because if this count is in place, the reaction should be to this area. If I see that the reaction goes to around this area, and then most likely we're going to get a new low, and that most likely is going to solidify the count when the euro, this can be the wave 4 on the dollar in general. The wave 4 on the euro, a wave 4 in the Aussie, a wave 4 in New Zealand, a wave 4 in dollar cat, every place. So keep that in mind. All the pairs, they are lagging the copper trade about 2 days, DV, right? Yeah, 2 days, I believe. So from here, we should get a new low, and then the reaction is the one that is going to tell you what kind of bounce we're going to get in the dollar. And then that's going to be an indicator where we stand in the dollar in general. Now, seeing the same copper trade in the 1 hour and the 4 hour, this is what I mean. You see, from here you got 1, 2, 1, 2, 3, 4, 3, and 4, and it looks like it's doing a triangle. 4 right here. The triangle means, in Elliott Wave, for the new guys right there, a triangle means a 5 between the both sides, the bear and the bulls, and they are 10 minutes. So I know that the cycle that started from here is ending with a new low, like I say. And then from there, I want to see the recovery. If you guys see, we're labeling this A1, B2. Now, also seeing the magnitude of this leg, it doesn't look like an ABC. It looks more like 1, 2, 3, and then a 4 and a 5. I want to see that before I move from copper. I want to show you something on the daily charts that but I forget to show you. is the RSI. The RSI right here, he's finding support in this trend line on the dailies, as you guys see from here. He's finding support in that trend line, and that support, and believe it or not, the idea that this is an ABC. But well, needs to be seen. But keep that in mind. That should be a plan for every one of you, tracking the copper trade and see where we are right there. I'm expecting during this week another move down right here to around 2.94, extension 2.50. And then from there, we need to track the recovery. Remember, we got this tool when we know what the CAD, the New Zealand, and the Aussie, they're going to do with 2 days ahead. So keep that in mind. If you see a strong recovery, and then you know that all we got in those pairs, including the dollar, is an ABC from the lows. We need extension here, guys. That's all I want to say. Now, oil is being pretty much very quiet last week. It looks like oil did 1, 2, 1, 2, 3, 4, 5 ways from here. We're labeling like this as an A. This looks like an ABC here, and we are expecting a move higher in oil. Now, the reason that we're labeling with that is because this leg looks like a 3 more than the 5. Anyone got a frozen screen? Sometimes it's related. You got a frozen also? So you guys don't have yet the oil screen, right? 1 second. Okay, I know. 1 second. You guys got now the oil, right? Okay, thanks, my friend, for letting me know. Okay, now, in oil, like I was saying, it looks like we got an A and B. I'm labeling as a 1 right here. Yeah, sometimes happens with the internet provider. So when you say that, let me know and refresh it. Everyone can get in track. So right here, the oil denied the new low right here, as we were expecting last week. And then it went out, but this looks very contracted. But eventually, either from here or from here, the oil should reach, as we've been proposing for a while now, around 64, 69 area before a recovery in the S way. Again, oil is more clear from the top than copper, and we're labeling as an A, B, as a triangle B, a Z, and we call W and S, a B as a flat, something like that, and then should trade lower to 64.22. Now, seeing where we are with the CAD trade, seeing where we are with the Aussies trade, don't get surprised, and seeing copper in a triangle, don't get surprised to see a move higher in oil and then another leg down to below the 75.52 and complete a double zigzag from this area in oil. It's pretty hard to count this bearish to the upside. Yeah, Tony's asking is the US dollar is going to go how? Higher. Yeah, the US dollar is going to go, like, we're going to get there now, Tony. Give me some chance right there. before we get to the individual pairs. Yeah, but it's going to go out. Now, technically speaking, that's what we see in oil. Now, any question so far, guys? I need to switch E signals and get to the individual pairs when we got the E signals. All right, let's switch there. It takes about 2 minutes to switch. Pretty much what we're trying to say always at the beginning, like we've done this now, is that there is a correlation that with the data, you eventually is going to be getting the correlation. That's why, as a technique, we always use that when you always track the clear structure in the market. That's what you do. You forget, you can love the euro dollar, but if the euro dollar is not clear in your eyes, trying to find the track or trying to find the count in another pair do not need to be the euro dollar. In this case, the dollar CAD is the clearest structure in the market in my view. Now, 1 second. And the dollar CAD is showing me that it's ending in wave 3 right now. So with a deviation right there you go. With a deviation, you're gonna get to the point when all the pairs they're gonna correlate and they're gonna get in the same page. What happened here? One second, guys. Something's wrong here. Hmm. 1 second. Let's see what happened here. Usually it's not like it takes that long. 1 second. Hmm. Think that now I got it. There you go. Sometimes happens. Okay. Now, we're going to start on the individual pairs with a clear structure like we've been mentioning, and I apologize for that. That's the dollar CAD. The dollar CAD on the daily charts, this is what we got. From the lows, we got a 1, a 2, a 1, a 2, ended the 3, the 4, and the dollar CAD should look at, and this is very interesting here. The count that we're following, the dollar CAD is ending 5 ways from here with the next move, 97.26. So technically, if that's the case, the FIBO needs to be related with this group right here, which the 1618 comes at 107.04. Now, the insides here, like most of the times with the dollar CAD, becomes a little bit ugly in the short time frame. So I want to see how he tests the 105.68 area. But eventually, if this happen like this, and the dollar CAD from the beginning of the week find a top around either 105.33 or an extension, it goes a little higher to around 105.59, or when 5 equals 1, that already passed. So around 105, 105.70, the dollar CAD should find a top. If that happens there, it's going to go down, proving dollar weakness, and then there can be the chance that we're getting from on an extended wave 5 being 1 and 3 no extended. Ideally, wave 3 ended at the 1.618 of the 1-2, but if we get to the small time frame, like at 8 hours, 4 hours, this is what you got from the top. From here is what matters. You got 1, 2, 1, 2, 3, 4, and 5. If you take a look at the RSI in the 4 hour, it's giving divergency already. So the divergency, in my view, is the divergency of the wave 3. Now, seeing that, I can say that most likely, unless you're going to call, like a nest right here, 1, 2, 1, 2. But well, we need to wait, but don't worry. The CAD is going to find, I believe, around 105.52, is going to find resistance, and it's going to go corrective. And that way, the CAD is going to define like what he's doing. Another scenario is this, and I don't know if any of you have think about it, is that the CAD is nesting. A big time nest. When, let me contract a bit, from the lows we got 1, 2, now the CAD is ending. I know that 1, and it's gonna go lower in 2 before the move higher. Remember, the CAD, we are in a flat in the weekly chart like the dollar is, and that's another alternative scenario that I have for the dollar. I haven't mentioned to you guys, but I have it, which is this. This is the CAD on the weekly chart. And this is what I refer. The CAD needs to go out here. So what the CAD can be doing is 1, 2, 1, 2, because something like it did right here, look. You see, before the big move higher. This is a flat. It needs to go higher strong. And to go higher strong, the dollar CAD need a nest. Now, how you going to play out that with the oil? Very easy. The second nest on the B way can be the S way that we're expecting in oil. You follow me? You got that, guys? That's a scenario because I don't see extension in the dollar right here. That can be also the case with the dollar, with the Aussie. That can be the case with the New Zealanders also, right? Now, let's move on to those pairs now. Let's start with the Aussie. but the trend is favoring the dollar. I want to be clear. We got a lot of new members right there. I want to be clear with them that the trend is favoring the dollar. It's 99% or 95% that the bottom in the dollar is already in place. Only that for us to declare the bottom, we need to see 5 swings. All right. So this is Aussie on the daily. You got 1, 2, or AB. Now looking on the daily, it looks like Aussie needs to keep going lower. Looking at the 8-hour chart, but this can be also a nest. That's the same with the cat. Looking at the 4-hour, 8-hour chart right here. From here, this is why you care about it. Now, you got 1, 2, 1, 2, 1, 2. Alternative. This is the end of Z right here as an alternative. Now, how you see it, it was pretty good with the figures. From here, you got 1, 2 to the 2618 right here on the bottom. I'm sorry. 2618 right there on the bottom. 3802, you got a 5. And then if that's the case, this low needs to be related to this move right here. Because then you got 1, 2, 1, 2. I think that is another internal nest. And right now you should be doing the 4, should be down, and then looks like the Aussie is looking for 94. Now it needs to be seen, this part right here. On that way, if we go there, you can be labeling like, hey, I went to the same place, 1 second. You can be labeling as, you got a 3 ways here. Unfortunately, we got the trade here, and we closed it too early. We closed it around here, but well, as part of trading. You can labeling as, this is A or the whole 4, or you can labeling as A, B, Z. This is 1, 2, ending the wave 3 as a diagonal. It's going to make a 4 and a 5 to around 94, or I would say 95.26 before another move higher. That's how we see Aussie there. Now, the New Zealand is more clear in my view. This is on the daily. It looks like 1, 2, 1, 2, 1, 2. 3, 4, we end in 5. Let me point you guys out that this low right here is the 2618 of the previous 3, and then 3802. It looks like it's looking for 7418, a 4 and a 5, and that's a debate within the metals, because you see how New Zealand is pretty clear. It's pretty clear that we ending the wave 3. We should be ending now wave 3 of 3 in New Zealand. We should be ending wave 3 of 3 in New Zealand. It looks like in CAD it's nesting, but it looks like Aussie is also ending wave 3 of 3 of the nest from the top. So technically this should be the path in New Zealand before getting to a big bounce right here. Keep that in mind. Now let's move on. Now we're gonna take another metal and we're gonna take a look at gold. It's too early to call a top in gold. Gold is it looks to me and we're favoring the idea that we are in the flat wave Z, and we see at least 2 more lows in gold before a significant bounce. It's very easy, guys. If you see the bounce to be corrective, then there is a top in gold right here. Otherwise, this was a flat, and gold is gonna go to the area that we're proposing around 2040, 2070 area. That's for gold. Short time frames looks like gold it's correlated pretty well with copper right here. And now we see like possible a triangle also taking place, short time frame right there before this to happen. Now, let's get to the beloved euro dollar. Everyone loves that one. I know you love cable. You don't have to tell me that. Okay. Okay, this is the euro dollar. This is the principal count that we're following. This is an 8 hour. Let me put a little more bigger so. Okay. Technically, this is the count that we're following. A, B, C, W, S, W, S. This is Y becomes A, 3 back, and then from here, A, B, C, W, S, A, B, and a C looking for 130.79, 131 or 139.77 on an extension 129.45. That's the principal count. That's the most logical count if you take a look only at the euro dollar. Now, seeing what you're expecting, and that's the question that I got for everyone here. What are you expecting in Aussie as the most logical count? Weakness in the dollar against weakness in the Aussie dollar strength in a series of 4-5. What are you expecting in CAD? 4-5 or a next? What are you expecting in New Zealand? I agree with that. Why? Because Rafi say that the market never used the most logical count. Exactly, that's a good point. What are you expecting in New Zealand? A clear structure, a series of 4-5 against in favor of the dollar. So the only way you see there is a gap right now on the euro dollar to the downside about 45 pips. Now, if that's the case, how are you gonna count that? Very easy. I mean, let me take the labels out. Let me take the labels out for a bit right here. And I'm gonna do the count for you guys. We did a video, like I say, it's on the latest Forex box. There is a video explaining this count. And I'm gonna explain it to you guys now why I see it possible. It's nothing that say no. That count calls for this to be 1. Forget about the degrees right now. I'm gonna do it in the simple way. Call for this to be 2. And then from here, you can have another 1. You can have another 2. Remember, guys, the proposed triangles, most of the times later become nests, like it happened last week on the euro dollar. And I want to see, I mean, I don't say there is neither one. I don't say that it's neither one yet, but it's a notion that we have to present it to you guys right there, to be honest with you. Now, from here, what we got 1, we got 2, we got 3, and all you guys know, I'm a FIBO guys. I want to make sense of every FIBO or every high and low in this market. And I was trying to find why the euro stopped at 33.60 last week. And then this is the only bearish scenario that say that. It's because it's to the pit, the 1.618 of this move. Now, having said that and seeing that, this should be right here, your wave 3 of higher degree. This one is kind of short right now in times to be, no, this count is not perfect. Let me explain that. This one is kind of short compared to the proposal 2. Doesn't look right, Elliott Wave wide, but it's a swing at the end. It still can be a flat. We went to the 23.6 right there, and then this become 4, and that being if that's the case, now the next that is in place is this one. And then he should be looking, and I want to see it bouncing. I know it's not completed here at the area that it is. That being the case, he can go as far as down to 29.48. Phi equals 1 at the same area, 29.45, same area right there. Or it can go to the inverse FIBO area that comes to the 123, 132.80. That is also the 618 of this, or 131.52. From there, we need to see a bounce, and we need to keep those FIBOs in place. But that count, there is nothing in this world that deny that count. Another scenario is becoming this an irregular 2, and then in that being the case, we are in the biggest degree like the cat is, and then the area is 32.40 when this left from here is twice as much as this left from here. So that's what it means. I mean, I want you to concentrate now at the beginning of the seminar when we explain the overlay of all those pairs, and think if that doesn't make sense with the rest that we explained. Okay, that's about the euro dollar. Now, short time frame on the euro dollar. This is what we got. This week should define where we are. I mean, this is a 1, 2, and this is the standard sample, guys. Why everyone right here, what we were expecting on right here, everyone was thinking a triangle. Remember Isaac? Everyone was thinking a triangle. You, me, everyone. Why become a nest to the downside? That can be the case on the euro in the higher degree on the dailies and the weekly. So right now, what should happen for the beginning of the week is something like a reflecting here, either from here 33.36, 32.29. The euro should find a bounce, and then still the flat can be the case. 132.82 is a great support right there. Either from here, from that area, it should bounce, and then if the bounce take 135, start buying the euro because it was a wave 4 flat. And remember, wave 4, it looks very small in time to the most of the bearish of the count. Now, if that's the case, what's going to happen is if this is taken before seeing 5 swing from here, that's telling me that this is a flat. And then you're going to buy the euro. Why? Because then the euro should do, let's say that happened from where we are right now, should trade 137.44 or 138.70. And I'm going to do like my good friend DV say, go, please euro do that, because that's going to be a gift of money selling from that area. Agree, everyone? See where we are? See what we can see right there on the euro. Now, let's keep going now and go into cable to make my good friend Rafi happy. Cable is gapping down today a little bit, not too much. We keep posting the count that I've been labeling as the DV count. It's the one that presented. It's pretty good. Nothing deny that yet. Nothing has denied that count yet. And this still can be a wave B or 4, or he can get compressed like cable always does. This correction not even have reached the 30 area 2 of the proposal 3. And the reason that we keep having this count is because we didn't get a single pit on divergency in this move down in the 4 hour. So with that in mind, guess what? With that in mind, cable is allowed to make a new low, and then CN cable on the weekly, on the dailies, as everyone knows already, cable can be done with a D wave right here. It can be done to the downside there, or cable needs to go a little more down like we were expecting to that 152 area before a significant bounce. This also, I mean, if you take a look at cable, not being known a metal pair against the dollar, it's like more likely like the US dollar, like the euro dollar. This goes better with the idea of the double zigzag lower on the euro. So, but anyway, as a trader, you only need to wait and wait for the opportunity to jump back on the market. That's for cable. Now, what else? Let's go over to another pair that it looks very clear to me. It's the Euro CAD. And then we're going to be opening for questions, so you guys can ask any question you want. And then you guys, don't be shy. Don't be shy. You can ask any question. I'm going to go to the second tier, or we call second tier pairs right now. We're going to start with the EuroCAD. What is it? Okay, that's it. This is on the daily. This is what we were expecting on the daily. But well, I want to get into the 4 hour before jumping there. There you go. This should be here. Okay, this is the EuroCAD in the 4 hour. I don't care about the daily, as you guys know me. I don't care about the weekly, the structures. All I care is the moves from here. Moves from here looks like 1, 2, 1, 2, 3, 4, 5, 4, and a 5. And I want to sell it at the open. And look, it's gapping down. I mentioned at DV yesterday that this was the best short in the market on the Euro group. You told me why. Look at the RSI, the divergency there. Very good completed structure. Look, every move, even this one is 1, 2, 3, 4, 5. So this is telling me that some Euro weakness coming related to the CAD. But in general, it can be a whole Euro dollar right there. Weakness. The target for a possible short right here can be around 37, 36, or 35, and the risk is right here at the top. So short time frame from the top, it looks impulsive. It looks like it did 5 weeks, and it went to the 618 right there by the pit. I want to sell it. I mean, I was saying myself yesterday, I don't want a gap in this pair, so I can sell it. Let's see if this is only wave A or this is the whole correction. Now, where it looks like from the lows, it looks like it did a flat from the lows, 8B, and it looks 5 ways impulsive to the upside. And look at the gap. It's gapping down big time right there. So unfortunately, sometimes that's what I don't get it, that they have to be a pre-market action. I think that that's unfair, but well, I cannot control that. Let's go now to the euro pound. On the euro pound, 2 ways. Either this one is also a DV count, which you got A, B, Z, a B, and then A, B, and this one is going to allow this to happen. Like it was 5 ways here, 5 ways here, 5 ways here. You need 5 ways from the top. But this looks corrective, in my humble opinion, unless it's a nest. But in the 4 hour, you can see it like a nest. But if you go to the intraday, like a 1 hour, 30 minutes, 15 minutes, this drop looks corrected in the first leg. But well, also the scenario is like this: 1, 2, 1, 2. Now getting separation in 3 to around 85, a 4, and a 5. The other way around in the euro pound is this one. When you got, and this is what I mean, the first leg from the top looks a 3. So, but it's in 3 ways. Yeah, that's what I mean. Not clear. It's not clear. That's why we're presenting both counts. So if I'm going to go deep, like I like to go, I would go with this count. I would go A, B, C, W, S, and a possible a flat from here. 1, 2, 3, 4, 5 to test the low before going higher. That's going very deep into the count. Technically, from the lows, you have A, B, C. You got 3 ways. So it's either one of the other. But this is very strong. And looking at the other side from the top, you can see right here. You can see, unfortunately, I didn't get a new low right here. But you see on the other side, one. You see the double zigzag. I don't know, Isaac, you can see it right there from the distance. You see, look, A, B, C, 3 ways lower, 3 backs, A, B, C. You see it, right? Very clear on the other side. And then the 3 to correct this, and then it looks like a flat. That's why still we're saying that there is a chance that we are in a flat. And that's what we say yesterday. The market is like edging at the current levels. It can be a flat, and then boom, when you don't know, the risk is higher. So it's better to stay on the sidelines for at least the London session until you see what's going on. Now, let's cover now the New Zealand. The Norwegian. Let's see. The Norwegian is very interesting. But before we go to that one, I'm going to show the Singapore dollar right here. Look. This is on the 4 hour. And this is a pair that all you gray waivers right there are going to agree with me. This is out of the dollar index structure. This is probably the more clear one from the lows. Look, 1, 2, 1, 2, very clear right there. And then we don't know exactly. We don't know that it ended right here, a wave 3, and we see a corrective move right here. But why this pair is telling you, Isaac, or DV, you guys that understand this very good. This is the one leading. This is why, exactly, this is why DV say a bit of dollar weakness to come. Why? Because look, every pair against the dollar, the dollar has made a new low compares to every pair, but this pair. Exactly, Isaac. Isaac say that the gap down can be a flat or a trap in the dollar and the euro dollar. Follow. Let me see if I can send the message clear right here for you guys. All the pairs against the dollar, why they're ending right now, guys? Wave 3. Yes or no? Some degrees. This one already ended. This is the clearest one compared together with the cat. Now, hasn't make a new line, a new high when everyone else does it. Have done that. Now, seeing at a 1 hour, this is telling you that what Isaac mentioned right there, that this can be a trap to the dollar bulls on the dollar. I don't say it is. I keep saying that I don't want to be. Look at the structure in the 1 hour. I'm being honest with each one. A, B, Z, it's clear right there. We're subdivided to 5 waves. A, B, C, lower when the low right here went to the 50% by the pit. It's either 1, 2, 1, 2, but the reaction from the lows is not a 3 of 3. The reaction from the lows is giving me divergency. So what's telling me? That it's a trap in the dollar. That's the conclusion of the seminar, guys. I don't want to say it like it's a trap, like a trap, but one of the conclusions that I got from yesterday, it was this pair. When I see a 3 and I see a 3. Look at the RSI, divergency. This is a sell. This is telling me that this is a flat on this pair. You know what I mean? So, with that in mind, getting back to the dollar pairs, what we can see, like we say when we cover the dollar, that he can reach 79.40 as a 1.236 of the AB in a flat. Europe at the current areas, 133.40 in a flat. Don't discount the flat. And we mentioned on the overview